everybody, my name is Adam Meyer. I am back here with another video, and today we're going to go over the stock market and basically where it's sitting. Is it a good time to buy? What's going on? What's the Fed doing with their interest rates? And basically the overall confidence of this buy that we saw in July, and if we can take advantage of the move higher or if we should be expecting lower prices in the future. So let's get into this here. All right, so this is the NASDAQ market, and this is what we're going to go over to basically scale in and see where stocks are. Is it a good buying opportunity, like a discount, or is it like in a premium where it could be selling off? For those of you that know me pretty well, I do a lot of day trading, and that's like really what I've been studying in the past few months. I learned a lot of ICT concepts. For those of you that know who he is, he does a lot of institutional style trading, and I've been learning the ins and outs of that style of trading, of looking for liquidity and the fair value gaps, and basically understanding where the market can move to and those certain dynamics of needing like rebalancing and also like liquidity areas. So that's really like what I've been studying the past few months, and it does help with understanding where these markets are going on either a long-term basis or intraday basis. But what I do, I look at the fundamental levels of the news of what the Fed is doing and what the world is doing for the economy, and I also look at these technical levels that I've been learning from ICT. So that's why you see all this stuff on the chart here of these purple lines. I have those as like liquidity points where price could be drawn to like a magnet, and it could be reaching up into these gaps that are called fair value gaps. Those are from ICT. Those are his concepts. So that's really like what I've been studying. But overall, we'll look at the monthly time frame, and we can see that we started retracing back down lower into these ranges. I believe we could have seen something lower down within here. I don't think it's out of the question depending on how bad inflation really is, and that's where the fundamental economics of the news and whatnot come in. But if we're looking here on the monthly, we see above this month right here, which is May, we could come up above that high in the short term because there's two equal highs from these 2 weeks, and then there's a gap sitting there. So this could be needing some rebalancing up within that area. Also up within here, if we could reach up into there. And if we use a Fibonacci retracement, we can go from the high to the low of this trading range, and it falls right in the golden zone of the 62 to 79%. And this is where I'm looking to see price come up into to start to accumulate sideways to then possibly work back lower, either for a retracement down within here, or then buy back up, or keep retracing and fail to make a new higher high, and then continue down lower to those levels that I was showing you here on the monthly, to where the COVID pandemic started, which was over here in 2020. So I don't have the crystal ball. I don't really know where it's going to go, but I do know long term that I'm going to be investing along the way, just like this whole drop that I mentioned on my previous videos. I'm dollar cost averaging on the way down, and that's where you can start to see this start to play out. You know, like you dollar cost on the way down, and now we're starting to rise up. But if you look here on the weekly, we made a low right about here, and then we made a lower low, and then on the RSI, it created divergence. So this is another indicator I use for basically determining where the market can go, and the momentum it has, and also the amount of buyers that are coming in, and also smart money. So what we see with price, it's making a lower low, but on the RSI, it's making a higher low. So the relative strength index, which is the RSI, it's making a higher low. So the strength isn't there, but the price is making a lower low. This is an indication that price could potentially start to reverse. This isn't financial advice, but I started seeing this, and then we started seeing those gaps again in price where the daily's breaking up higher, retesting, breaking up higher, retesting. There's a gap sitting right here, and I was looking for these highs up in here, and now I'm looking farther up into there. So what we could see, or what I am anticipating, is some movement up within here and then a possible sell-off from there. We could retrace down into here and then buy up, or we could just retrace here and then keep going down. It really depends on like what the news is doing, but that's generally what I'm looking for. So I went on the Morgan Stanley website, and I found an article, should investors trust the latest rally? And that's the rally I was just showing you back in July, where it started to buy up. The technical analysis are lining up with the fundamental analysis. So what has been happening with this rally is that the Fed raised rates 0.75%. And them raising those rates was a good sign because they're finally taking the initiative to actually strike this inflation and get it down. So they think everything is delayed. So that's what's happening in the whole world of economics. Like when something happens, it's delayed because it has to filter through everything, through businesses, the economy, and whatnot. So that goes through. So them raising rates, they're expecting inflation to go down, and that is a good sign for the market. So that's like what they've been saying. And inflation seems to be slowing. Most commodities are in bear markets, down at least 20% from their peaks, and gas prices have dropped, contributing to a decline in inflation expectations to 2.8% in July. That's actually pretty low compared to what we just had, which was over 9%. So just with that being said, the gross domestic product also fell 0.9%, which is the second quarter in a row, because the first quarter it was negative, the second quarter is negative, and that's a technical term for a recession. And during a recession, that's usually when the stock market can type of bottom, but we don't know how long it can last or whatever. But a lot of politicians are saying, oh, it's not a recession because the labor market's really high, which it is. Labor market is actually very high, which is a weird type of recession. It is actually different this time. I know that's a weird term to say, but it's actually different because labor market is really high, inflation is really high, but the economy is like slowing down. So it is a weird type of recession. Could we see layoffs in the future? We're already seeing big corporations like lower down, like corporate hiring or even firing and layoffs, and that could be the start of the negative growth for jobs. But a lot of like lower end jobs are still hiring. You still see hiring signs like everywhere. So it is a weird time. We don't really know what's going to happen. So basically, for the market to go up, we need inflation to go down, the Fed to say, finally, we got it down, we're getting it down. That's good for companies. Companies will start to go well, people will keep spending, jobs will go up, everything will be happy. But if inflation keeps going higher and higher and higher, they're going to have to throw like the whole economy and stock market under the bus, and that's going to get ugly for everybody. But like also, that's a buying opportunity, because if the stock market goes down forever and it's down, the world as we know it ain't even going to be here. So that's why I see at such a young age it's a good time to actually keep investing no matter what happens, because I'm in it for the long run. And if shit actually hits a fan, I'm probably not even gonna be alive. There's probably gonna be a nuclear war or some shit. But I don't know. We'll see. Lastly, here's the job report that happened in July. 528,000 jobs were created, and a sign of strength in the job market. The Fed doesn't really like that because they want to get jobs down, which will actually help the unemployment. Because there's more jobs open for every unemployed person, so they want to get that down lower. And basically, this is just contributing to more inflation, more jobs, and all this. So it's wild. So it's a weird type of time that we're living in. So the Fed's not really going to like that, and that's why they're now pricing in a higher likelihood of a 0.75% interest rate hike again in September. So we'll actually see what happens, and that's why these numbers are important and can actually control these markets up or down. And hence, that's why July rallied, because of good news with the economy and whatnot, and them expecting the interest rate hikes. And then let's say next month they're expecting a 0.75% hike, and it comes in as something different, or even higher or even lower. It's going to be like, oh shit, what's actually happening? And it can also be controlled by inflation. So if inflation comes out at 10%, versus like a 9% versus like a 2%, it's going to have a different reaction either way. So overall, we got to have faith in the economy. Like that's how I look at it as an investor: faith in the economy, and basically like a long-term perspective. And I'm buying as it goes down, and I'm buying less as it goes up. But I'm like, for example, NASDAQ, I have X amount going into the market every single week. As the market goes down, like it has been all year, I've raised the dollar cost average limit from this price to this price. And now as it goes up, I'm going to lower it down a little bit more, lower it down. But as the market's going down, I'm raising it up. So you're buying more as it's dipping down, but as it's going up, you're buying less because it's more expensive as it goes up. So that's typically like what I'm doing in my portfolio. Yes, I have other ones that are consistent I don't even look at, or like a 401k and whatnot. All right, everybody, I'm going to wrap this up here. Let me know what you think. Leave a comment, leave a like, and join the Discord chat if you want. That's where I throw my analysis for these day trades and also like ICT studies that I've been doing myself. So you can stay updated in there. If not, take care. Enjoy your lives.